We can draw comparisons or distinctions between how this particular bill became law and the Reagan Act became law. There are similarities, there are differences. The Reagan Act much more focused on lowering individual rates,
Right.
this one on companies. But take us back to the economic climate in 1986 and then tell us what happened in 87 and why, and what are the similarities and differences?
Certainly. Well, as you're right, there are many differences between this tax bill and the one that was adopted in 86. 86 was the culmination of a lot of tax politics that had been begun in 1981 with a substantial tax cut early in the Reagan administration that produced rising deficits. And it gave rise to the attitude, well, obviously, deficits don't matter because in 1982, that great bull market began on Wall Street and galloped on and on and on. In 86, this fairly carefully tailored and constructed tax bill was adopted with the idea that it would spur economic growth. And the jury's out about whether or not it did that. But what's interesting is to, as you say, fast forward 1 year and look at how radically tax politics changed after Black Monday. Almost immediately, I mean within hours, deficits, federal budget deficits, soared to the top of Wall Street's worry list. And the comparisons with today that worry me, frankly, is that gap between Wall Street and Washington. Wall Street back in 86 was firmly convinced that nothing Washington did mattered. Stocks were going to go up regardless. It didn't matter what happened in D.C.
We sort of feel that way now, don't we, Ron?
Exactly.
We're sitting here staring at a government shutdown, and the market's going.
Exactly.
But listen, we also have experience with shutdowns that shutdowns don't matter, right? They can last for a couple of weeks, and we get through when we move on.
But to Diana's broader point, that the market seems to be moving up no matter what was going on in Washington.
And this is an interesting inflection point.
Or in Pyongyang.
Or in Pyongyang. If indeed this tax reform bill increases the budget deficit at a time when, unlike the 1980s, the Federal Reserve is going to be raising interest rates, which if you go back to the early 80s, the Fed was cutting dramatically. Government spending was exploding. We're not going in that same direction
in
right now.
87, was the economy as hot as it is today?
Absolutely.
Was the market as bubblicious as it is today?
Yes.
Were interest rates rising as they seem to be today?
To a different extent. So from January of 1987 to August of 1987. The Dow topped on August 25th, 1987 at 2722, but went up 1,000 points.
That's 2,700, not 27,000.
Yeah, exactly,
right.
yeah. But it went up 1,000 points in a year. It went up 38%, I believe, from January to August. But the long bond went from 6% to 10%. The 30-year bond back at the time was the benchmark. So rates were accelerating. The dollar was depreciating, as again is happening right now, and deficits were a concern. We had twin deficits. The budget deficit, the trade deficit were concerns. And we had a trade argument with Germany that was ongoing at the time that also helped because at the time, Secretary of the Treasury James Baker said, basically, we'll let the dollar go to hell unless Germany agrees to certain trade terms. And we had the crash. So there were a whole host of similar antecedents for the crash. We might be a little bit off on timing here with respect to how long it takes for us to have another market event, but there are some similarities.
But and the point that Ron makes so wisely is that none of those issues that he has itemized there mattered to Wall Street one bit until they did. Until they did. And it turned on a dime.
Yeah.
You know, on the 1st of October, 1987, it was deficits, you know, and on the 20th of October, 1987, after Black Monday, it was, oh my God, we've got all these deficits. Where did they come from? So that psychology is what worries me. The psychology is so similar. There's lots of other differences policy-wise, but the psychology is so similar.
What I remember of that time, and
we were all there.
And we were all there. I mean, this is why this is fun. We should have dinner over this. But I remember the economy was hot, the market was rising. At the same time, interest rates were rising, long bond going up. That feels a little bit like today in a different, it's not a pure analog.
No, and we had Middle East trade frictions. If you recall, the morning of the stock market crash, October 19th, 1987, we bombed the Karg Island oil terminal off the coast of Iran, which was something that was part of a military effort underway at the time. The Iran-Iraq war was still extant. And we were having major trade disputes with the likes of Germany and Japan. And the dollar was in play in that regard. And our president was saying, and our Congress was saying very tough things about trade, as President Trump is today.
That crash was, of course, the first real test of Alan Greenspan, who had become the Fed chief in April.
No, not even.
in
10
August.
weeks. 10
It
weeks
was in
before.
August. Yeah, you're right.
He had barely found the restroom at the Fed by the time.
But he acted quickly.
He did, and he had great instincts. And I must say, he was also guided well by Jerry Corrigan, who was the president of the New York Fed in that crisis. But he did exactly the right thing, and he did it immediately without waiting. So, but the Fed doesn't have that kind of room.
No, not now.
I mean, then he could cut rates, and he did.
Yeah.
He could keep rates down and provide money. Where can they cut below zero here?
Well, they backstopped the entire system at that juncture. The banks, the brokers, the specialists were absorbed by some of the system. I think the big
Go get the book, right?
Oh, absolutely.
Go get the book,
She's got
Diana's
the one
book.
secret that nobody else had, which is how the market turned on October 20th, the next day.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.